A recap of last week gold weekly analysis. I stated emphatically that gold is going to go up, and of course I shown to people the areas that gold is going to get to. The price was at this place, and using Fibonacci based retracement extension, I mapped out the areas I expected the price to get to, and as you can see, the price got to 50 zone, 61, and then boom to 100%. So let's go to this week's analysis. If you've not subscribed to my YouTube channel, kindly hit the subscription button, turn on the notification bell to stay tuned whenever I post a new video. Follow me on all social media handles: Facebook, Twitter, currently X. Join my Telegram channel to stay updated every day. Okay guys, today we are going to look at the monthly time frame. The reason for coming to monthly time frame is very simple. Pay attention and watch the video to the end. When you look at this candlestick, it symbolizes that there was a demand in the gold market, of course, which resulted to this green candlestick pumping up. As you can see, this candlestick have successfully engulfed the body and the tail of the very candlestick of interest. So obviously, you can as well understand that it closed above it on this blue line. This simply implied that for the month of August, the bullish candlestick have successfully closed above the bears, as you can see here. So obviously, the price of gold is going to stay up the coming week. But then, let's go to the weekly time frame. Alright guys, this is weekly time frame. Just like I said, when the candlestick continues to develop, you will start understanding the chart perfectly. Like I mentioned the last week guys, that this is a bullish candlestick which is likely to move the market up. And I said that should this very candlestick engulf the red one, it simply means that the market will stay all up. And as you can see, the major area, the major candlestick of interest, that the very bullish candlestick have successfully closed above it, which means that gold is all up. There is a breakout on the gold market after ranging for a very long time. So, and as you can see, the obvious is about to happen. The price of gold is going to fly more than 1,000 pips up. That is, it's likely to go above, or do I say to get to $3,550. But I never know for now. I'm only saying it is likely. But remember, whenever I say, it usually happens. But in the market, you don't give people guarantee. You only state what is likely to happen. But obviously, we are going to get there. Now, guys, this is the old structures where we expected price to get to, which it will, but not at the moment. But at the moment, this is the areas of interest. See this yellow line? Yeah, that is the area where this bullish candlestick successfully engulfed the demand area, because this currently has turned to be the demand area. Like I told you that as the candlestick is developing, it will continue to show you things. So I say based on probability of things that are going to happen, but as you can see, it is a powerful demand area, and this candlestick have currently engulfed it, because the price of successfully broken above all the structures. As you can see, this very candlestick that formed a very strong structure around here, this place. So you can see that this very bullish candlestick was successfully broken both the structure, DIX, that one, and the blue one, closing above this very area. So we are expecting the market to retrace probably to this very zone, that is the demand area, to come back to touch before spiking up. Let's go to small time frame. All right guys, on the daily time frame you could see this, right? So obviously the price is going to come down, right, to retest here. In some cases people will be targeting this area, but the successful area I expect the price to come to is this zone. So should the price go below, then we'll be stopping at this zone. But this is the exact zone I expect the price to touch and then go up again. Okay guys, on the 4 hours time frame, you could see obviously that the area which I said that the price is going to retrace back to is a very strong resistance area, as you can see. So obviously there is every tendency for the price to pause here. Let us use Fibonacci retracement based extension to check exactly if actually the area I expected the price to get to is correct. DIX, let's do this guys. We're going to start at the area, this support area where the price broke above and where the trend started from for the last 2 weeks till last week, and then where the 100% where the price got to, right? So you could see that the very area which I made mention of is actually the 50% retracement area. So in some cases it will get to 61%. So which means when you look at this 100%, you could see that the 100% did not engulf below where the trend started, which means there's no how the price will come down up to this 100%, signaling that the price direction have finally changed. All right guys, let us also use Fibonacci retracement to see the area to expect the price alternatively. Okay guys, looking at the Fibonacci retracement, you could see that we have alternative zone where to expect the price. This is the 50% using Fibonacci retracement, and this is the 61%. So when you look at the chart, you understand that this area of 50% is the area of 61% using Fibonacci based retracement, meaning I expect this two structure area to be stronger than DIX. But either ways, these are the 3 zones where the price is expected to react. So I am going to place horizontal lines on it. Alright guys, these are the 3 zones you should expect the price to react when it is retracing. Let's go to 1 hour time frame. Okay guys, for the fact that the price of gold retraced up to 100% of Fibonacci based extension, I tell you for a fact that there will be instant sell on the gold market when the market opens. The highest it will do here is to range a bit, and then the price will start falling to get to any of this zone. Sometimes it will do this and then go back, but not up to where it started selling, and then bearish back into this zone. So this is what we do Let us place shape here. All right, guys, as you can see, I placed the shape in that zone. Let us take our bearish signal and of course set it. DEX. So guys, this is the short position. Let's set it how it should be. Moment, guys. Coming to this zone, we'll be expecting 500 pips. 500 pips, guys. Moment. We'll be expecting approximately 500 pips. So guys, you can see we've been able to set the sell signal minimum of 150 pips stop loss. Reason for this 150 pips stop loss is there will be a spike, probably. There might not, but they may. You know, it's gold market and it's Monday, new week. There might likely be a spike up, which might not be up to 100 pips or about 100 pips. It is normal in the gold market. So, and the price will of course start sinking down. But then don't forget to do your own analysis and use risk management while trading. Subscribe to my YouTube channel if you have not subscribed. Follow me on Twitter, X, Facebook. Join my Telegram channel for daily update. I post signals on a daily basis and I trading advice. Bye for now.